But now we're coming back to that central issue of US tariffs and what that is going to mean for Indian companies. Like we told you just a while back over the weekend, again, we had very, very sharp statements coming in from Mr. Donald Trump saying that it's impossible to sell anything here in India. And then we had the US Commerce Secretary saying that everyone must make in America. It doesn't matter how much is the cost, whether you get robots to do it or humans to do it, but make in America. Don't ship things into the US. Where does that leave companies that have reasonably high exposure to the US market? Well, we're putting the spotlight on one such company. Right now, I'm talking about Vinati Organics. Now, interestingly, Vinati has decided to set up a wholly owned subsidiary in the US. To talk about this and more, we have with us Vinati Saraf Mutreja, Managing Director at Vinati. So, Vinati, great to have you, with us. You tell us, is it just a coincidence? Were you always planning a US subsidiary all along? Or is it sort of a bit of a response and maybe a need of the hour, given the new dispensation, given what the new US administration wants? Tell us more about the US plans. I think out of your total exports, US is almost 36%. Out of your total revenue, correct me if I'm wrong, but US contributes to 20%. So that's pretty significant.
Sure. Good morning. So I think like you rightly pointed out, it is actually just a coincidence. We always needed to have a subsidiary in the US simply given because it's such a large market for us and we do export a fair bit to the US. A lot of our customers want us to have a warehouse in the country itself, so it's easier to distribute products. As far as the tariffs are concerned, I don't think as of now it affects us too much. It only affects us in products where there is local manufacturing. But if you look at our top two products, for example, IBB or ATBS, there are no manufacturers in the United States for those products. It's manufactured in China and China has a tariff already. So anyways, for the last 4 or 5 years, we've had an advantage supplying to the US. And I do believe going forward, that advantage will sustain for these products at least.
Vinati, just tell us how the dynamics were working till now for the business. For your exports to the US, which is 20% of revenue, what was the kind of duty that was involved? I mean, just explain the dynamics. How was it working up until now? And now, how much of that business is going to move through this wholly owned subsidiary, which then, it becomes absolutely tariff-free in the sense it's tariff agnostic, fully protected then?
No, I don't think, first of all, I don't think the subsidiary becomes tariff agnostic because there is going to be transfer pricing involved. So the subsidiary is not a way to avoid tariffs. I don't think that is possible and that is not the intention also. The subsidiary is simply there to better service our customers in terms of distribution and having a local warehouse. And maybe if we want to do some sort of product customization or small synthesis, if at all in the future needed. It does not circumvent the tariffs in any way.
Means you're still exposed, Vinati. That's an important clarification. You're right. I mean, then that means there will be transfer pricing at play. So what is the blended tariff right now that's applied to, to the products that you're selling into the US markets?
So it depends on products. It's a basic custom duties that they impose on products, maybe 7%, 7.5%. That's what it is as of now.
Okay, so the US, you're not going to manufacturing the US. You never were manufacturing, and even with this new subsidiary, it's only going to be warehousing and maybe some customization. No manufacturing takes place out of US, right?
Absolutely, correct. That's right.
Okay, now the US has increased tariffs on imports from China by 10%. Does that change the dynamics for you in your business line?
Well, it should make us competitive by 10%. So let's see. And honestly, this quarter is looking good. The next year is looking good. I'm not sure how much of this is because of tariffs. It could be just a general market situation. It could be just in general, our expansions are coming on stream. And please realize we are into niche chemicals, specialty chemicals, where we are market leaders and there are few competitors. So a lot of these tariffs don't have a real effect on our products.
So just clarifying that blended number, Vinati, that you shared right now, blended imports into the US, that's your products, the blended tariff is about 7.5%, right?
That's right.
And you would know how the supply chains work. So since it's all about reciprocal tariff, what they're saying is that we will tax you as much as you are taxing us. I don't even know if you're importing. What would the reciprocal rate be with India? Is there any threat to that 7.5%? Moving, higher?
Again, maybe we do buy most of our raw materials domestically. Again, domestic suppliers also price it on import parity. So if there is an additional duty, I'm sure the domestic suppliers will take advantage of that and pass it on. But we also import a lot from Korea, from China, from other countries besides US. So on the whole, I am not worried about this tariff situation, at least in my business, whether it's from the supply side or the sales side.
That's good to hear then, Vinati, but you're sounding quite optimistic about quarter four's numbers as well as on FY26 prospects. So that clearly means that on ground you have seen some kind of pricing improvement as well as you believe that demand will be fairly firm. Give us, without getting into numbers, for quarter four, if you compare it with quarter three, how has pricing improved, if you could quantify it, and demand strong?
Sure. So pricing remains stable. We have long-term contracts, formula-based pricing, where we pass on the raw material increase or decrease to our customers. But the demand is looking strong, especially for ATBS. Again, coming to antioxidants, the new products, the demand in India is growing, is growing quite a bit. Butyl phenols, we are running at 70-80% capacity utilization. My new plant is very much ready and the product is getting approved for the other specialty products, which goes into polymers. So on the whole, our product portfolio is increasing, our product mix is changing, and that is where the optimism is really coming from. My new plant for ATBS as well is about to get commissioned and get ready, where we're already oversold.
Okay, all right. Then now let's get to numbers. Tell us, FY25, we let it skip because, you would be in that silent period. But on whatever you deliver in FY25, given the kind of demand you've seen, given the fact that pricing could have bottomed out and you have expansions coming on stream, what kind of revenue growth are you working with? What kind of profitability margins?
Sure. I think one can expect about 20%, maybe 15 to 20% revenue as well as EBITDA growth in the next 2 years, 2 to 3 years, year on year.
And in the past, you've spoken about 26 to 20% EBITDA margins on a sustainable basis.
26%, 26, 27% EBITDA margins. That's right.
Okay. And all your capacity expansion, is it on track?
So far, yes. So far, so good. Fingers crossed. Yes.
Okay. And what about competitive pressures? Investors are a bit concerned on if competitive intensity is picking up.
If the demand is growing, then we are all, taken care of. I'm not worried about competition. Yes, we do face competition from China in antioxidants. That is one product which is being dumped into the country simply because the demand in India is growing. And we have applied for some sort of relief from the government, but let's see if that happens, does not happen. That's the one product where we do see competitive threat, yes.
Vinati, I'm glad you brought this up because I wanted to actually come to the whole China angle as well. It's all globally linked, right? So you're saying on one end, on antioxidants, there is some dumping happening. So the industry is asking for what, a safeguard duty of sorts? What is the kind of tariff protection that you're seeking?
Yeah, we have requested for an anti-dumping duty.
And what level would be suitable or required, to give adequate protection?
Could be anywhere, 20% in that range, give or take.
Okay, 20% anti-dumping duty for antioxidants which are coming in from China. Just to come to the...
It's still under process and, it will take
discussions,
some time.
Absolutely, yeah.
What's the feedback from the government on this anti-dumping duty proposal or request from you all?
No feedback, no feedback yet. We have applied and we are just waiting for them to review and take their decision.
Okay, all right, Vinati, just leading into our next conversation, we've got a fair idea about your business. What about global freight rates? How have they moved? If you could give us for your business, just some color.
Well, so freights have come down in the last couple of months. And again, we pass that on as well to our customers. So whether it is raw material fluctuation, freight rate fluctuation, it really, we are agnostic to that volatility.
Okay, Vinati, always good to speak to you. Thanks a lot for joining in, giving us sense in terms of your business. And since we have ended that on the freight situation, I'll tell you what, we'll slip into a short break. On the other side, we'll focus on GE shipping. That's the next management on our radar. But